Good afternoon, everybody. Today is Tuesday, May the 27th. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure should be the same. Oh, I'm not in CRWB anymore. Outside of that, it is the same as it was on Friday. Boom shakalaka. Okay, let's jump in. So a really strong day. SPY's closed up over 2%. I guess that's including, we're continuing to tick higher here after hours. So including a little bit of after hours uptick, SPY's closed up over 2% on the day. Q's 2.35% on the day. IWM up 2.6% on the day. Monster upside trading session today. TLT, not giving me a quote. There it is. Up 1.3%. Gold was down. It's been very inverse to the market recently. Yeah, I said it was going to be a day trade. And let's let Bitcoin finish up a percent only. Yeah, I mean, just incredibly strong. It's the same theme. Tariffs are on, the market goes down. Tariffs are off, the market goes up. On Friday, tariffs were on, and the market went down. Today, tariffs are off, and the market went up. Same story. This market was incredibly strong today, though. It kind of exceeded my expectations. So we were saying at the end of last week, like Thursday, Friday, we keep talking about, like, technically time is bullish, and Thursday, Friday gave us a price correction basically down to the 21 EMA by Friday's low, almost down to it. And if you're a technical bull on this market, that is where we would want to come in and buy. I wasn't aggressive on any real new longs into that down move on Friday, so much as I was kind of covering shorts, which certainly helped me out a little bit today P&L wise. Though my shorts definitely still hurt me because it was such a big up day, not as much as they would have otherwise. So, you know, technically this market just continues to look really strong. The technicals are bullish. The market dynamics are becoming increasingly less bullish. And there still is the potential that we get some degree of worsening economic numbers as we start to go into June and July. For May and June numbers specifically, I actually don't think it's going to be too bad for the May numbers. Maybe more for the June numbers that we see in July. But, you know, who knows? We're speculating on that. We have to see if it happens and how much of it's priced in and what the expectations actually look like versus the reality of the numbers. But just an incredibly strong market. The technicals continue to be super bullish. As long as we're above 570, there's no real reason to be a bear on this market, technically speaking. We look phenomenally well. And now we're looking like Friday was the gap down to buy. We'll see if we get continuation on that. The important levels right now for this market are basically the recent highs, which are around 595, and Friday's low. Friday's low is really important. Technically, it's into the 21 EMA. So if you lose Friday's low, you're losing that 21 EMA. I also think that the CTA medium-term sell trigger is a bit below Friday's low. That's notable. You actually could see systematic selling on the downside in a down market now, and that's new. There still is a small amount of buying in a flat and an up market, but if we are able to sell down, you could actually see a little bit of a feedback cycle of selling that comes in. Though, with how we traded today, that's not looking like it's happening anytime soon. So the interesting thing is we're starting to lose these market dynamics a little bit. I think in a flatter up tape, CTAs are buying like $2 billion worth of stock over the course of the week. They're buying $12.5 billion over the course of the next month. That's so much less than we had seen on any of these last 4 weeks where we were buying, I think like it meet at least that much, at least that next monthly number we were buying like every week. And it seemed like CTAs and vol control were just passing the baton back and forth on who the bigger buyer is. And now, again, we're losing the CTAs. They're still supportive a little bit, but it's not like it was. Thank you, Pat. Pat giving the updated numbers there. And like Bill just said, if we continue to have these large returns, then the 3-month vol window is not going to go down. so it keeps vol control on the sidelines also. So we don't really have the systematic bid in the same way anymore. We do still have corporate buybacks, and corporate buybacks are big. I think that we saw in this open window they're buying like $5 to $6 billion a day. But we're kind of losing those other bids, and that's at the same time actually that we're set up for a pretty large end of month pension sell in the equity market as part of the rebalance because May has been so incredibly strong. The number that I saw this morning, and it's probably even more than that now because the market was up today, was that the pension fund rebalance is going to be $19 billion to sell. So it almost actually looks like we have a degree of these market dynamics that are starting to come into the downside if you include that pension rebalance. And when it's a large pension rebalance, sometimes it starts to get front run a couple days ahead of time. Whether or not they were doing that as early as today, I don't know. It certainly didn't look like that if you look at the 5-minute chart of the market. What today looked like to me was a positioning squeeze based off of what happened on Thursday, Friday last week and where we gapped up to. Anybody that was trying to press the short side as we actually sold off a little bit last week just got totally squeezed today. And when you look at what was running, Mag 7 was super strong, but outside of Mag 7, it was... where do you see 125 billion to sell? Outside of Mag 7, it really seemed like today was led by those same super speculative, high short flow stocks to the point where I hate saying this term, and I'm not necessarily acting on it, and there's something that can last over. Oh, yeah, that's global. I generally just pay attention to the U.S. number. Globally, in a down tape over the course of the next 1 month, it's $125 billion worth of selling. What was I just saying? So some of the stuff that they're running right now really feels like it's late in the cycle, and it's just kind of like one name after the next. I mean, the stuff that was running today was like BBAI started waking up. BBAI is up 23% on the day. SOUN had a huge day today. It was up 16%. They're further squeezing Tesla. Tesla actually had a sick breakout today. Some of you guys called that 3050 breakout today, which was very impressive. But Tesla, another 7% day to the upside, and it had bad news out pre-market this morning again. This stock does not care about bad news at all. It just keeps running in the face of any negative news at all. IRBT, iRobot was up 50% today. That's pretty sick. I didn't see that one till literally right now. They're running the nuclear names. That makes a little bit more sense that they're running these names just because at least these are in the news. But SMR up 17% today. I was surprised and actually somewhat disappointed that the quantum stocks rested. This QB, that was the symbol QBTS. I'm actually surprised they didn't run this considering what was going. I was planning on shorting QBTS if it got up to 21 today, and it just didn't do it. You had AMC run today, which AMC might have had a reason behind it. It sounds like a lot of people went to the movies over this long weekend. I think it was some really big numbers, but AMC up 23%. I mean, they're really just hitting the point here where they're just running a lot of the trash again, and a lot of times that seems to be very late cycle, but that's not like an exact thing, right? We know that. I feel like we've seen every single time since the little bubble we had at the end of 2020, early 2021, every single time they start to really run these crappy stocks. What did Plug do today? Plug was only up 1.6%. That's like Plug and Fuel Cell, I feel like, are classic end of cycle names. Fuel Cell is up 5.5%. Every single time they've started to run these names outside of it really lasted at the end of 2020 into the beginning of 2021, usually you're getting very, very close to the top. So I kind of feel like there's a ceiling on stocks right now in the short run, especially with the pension fund rebalance at the end of the month, unless NVIDIA blows out. If NVIDIA blows out their quarter to the upside in terms of the numbers and the guidance, forget it. The market can explode off that. But barring a really blowout quarter from NVIDIA that jets the stock higher, I just feel like this market has like an upside ceiling to it at this point. Today was incredibly strong, but I feel like it was just people that were caught positioned wrong over the weekend when the news actually hit this morning that was able to rip this stock market up higher. And I was very wrong today. I thought that if we got a positioning squeeze in the beginning of the day today, that it would be in the beginning of the day, basically. We had a large amount of upside extension. This market's just been so insane recently. We had a large amount of upside extension from that gap. And the thing that was notable to me, I did a decent amount of shorting from fairly good prices pre-market, but eventually they blew through those prices. The thing that was telling to me is like, all right, we erased the Europe tariff news. The starting point of that was 582. It makes sense that we erased it because we went back to a pause for July 9th, and maybe it even makes sense that we have a little bit of a premium above 582 because it sounds like there's even more trade progress with Europe than there was, let's say, Thursday of last week before Trump announced the 50% tariffs. But $10 higher in the SPYs, we almost closed at 592. Seems like almost too much. I know that's not where we were pre-market. Pre-market it was $5. Even that seemed like a little bit too much to me. So my game plan in the morning meeting today, which kind of turned out to be wrong, was basically let's look to short the gap up versus an opening pivot. We did get a very quick 7-minute sell-off in the beginning of the day. It looked like right off the opening high is where you could have shorted. And then I was looking for the re-short sale. Like I think I called out at 9:55 on kind of this equal high with this smaller tail, even though it wasn't confirmed by volume, an opportunity to sell short again because now it's 10 a.m. and because we rallied this much off that low, we have a lot of extension on the 5-minute chart again and really being led higher by the Qs. But this market just basically never paused almost all day. First real pause was at 11 o'clock. 11 o'clock is usually when 15-minute extension is really important. You usually can't really sustain 15-minute chart upside extension post 11 o'clock. And we didn't get a 15-minute chart correction today until 3, which is wild, wild strength. Especially when you know that the systematics aren't really buying today in the same way that they were. Corporate buybacks are, but otherwise it just seemed like people once again caught off sides with the news that hit on Friday, and then this market just accelerating to the upside and creating a ton of upside chasing. But I did not expect this market to be as strong as it was. And then into the close, though, I actually was not expecting that sell-off in the last 10, 30 minutes like we've seen so much of last week. And I'll tell you why. It's because most of the time when we've seen that sell-off in the last 10 to 30 minutes of the day, which we've seen happen a lot recently, it's because it seems to me like during the trading session, on a lot of those days, the market wanted to go down, but it couldn't because of the never-ending systematic bid. And then the systematic bid turns off, and then the market sells down. Today, it did not seem that way to me at all. The systematic bid wasn't there, and they were buying the hell out of the market. It never seemed to me like this market wanted to actually go down. So I was like, what does it matter? Maybe it matters a little bit if the buybacks turn off. What does it matter if the systematic bid turns off? Because it was actually never turned on to begin with, despite this bid. So I was kind of surprised when we saw those big SPY puts go off at 3:30 or whatever for SPY 589. And that person lost a lot of money. I think there was 2 or 3 of them. The first one was almost $50,000. So that person lost probably 6 figures in the last 30 minutes of the day. So that hurts. I'm sure it's not a person. It's probably an institution. That's gave me a little bit of hope that we would see that selling come in because that's usually the really smart money. Usually you don't see it happen that often. We did on one other occasion. I remember we spent a lot of time talking about it in an afternoon meeting. A lot of times if you see large order index level calls or puts coming in with 30 minutes left that are 0 DTE that seem like they're almost lottos, so often those end up paying because it's somebody knows something. Somebody's got some smart money on the flows into the close and they're putting that bet on and they get paid. So I actually didn't think we were going to get that sell-off. And then those SPY puts came in. I was like, oh, maybe we will. And I actually adjusted my game plan a little bit to be a little bit more greedy on my shorts into the close than I normally did. And then, of course, my original hunch was correct, and we ripped on those last 10 minutes, and kind of cost me a few dollars in P&L, which is what it is. But overall, just incredibly strong day. I took a few day trades today. I shorted SMCI a little bit and just made a little bit of money on it. This name saw a decent amount of bearish option flow today. I bought UVixie and basically ended up break even in it. I bought UVixie off of this base, and a couple times it seemed like it was moving higher when the market was still moving higher, and I was able to get a sale on the thing, and then I got stopped out. So kind of ended up being a break even trade. And then I kept. I forgot to put this in my disclosure. Whoops. I kept SMR. I am short SMR, so that the whole world knows. I am short SMR. I am short SMR. I'm short SMR for disclosure purposes. The other name I took as a short, which I kind of meant to be a day trade, and I was a little bit greedy on it, and it gave me a full 15-minute correction in a couple spots after I was short. So, and I was just a little bit greedy on it because it's a day 3 to the upside and starting to really extend on the daily chart. So I did decide to keep a little bit of that SMR instead of have it being a pure day trade. It ended up closing at highs, which was annoying. I covered some into this move and did not reshort any stock that I covered in the last 30 minutes. But we'll see where it is tomorrow. This SMR day 3 to the upside, trading at 35 and change, with the ADMA at 127. So, sorry, not 127, at 27. So just really extended stock. Though this one at least justifies some degree of extension because it is trading on some of this nuclear news. Some of these other names, I don't know. I wish some of these other names were approaching a day 3, but I kind of don't want them to get there. Like BBAI starting to wake up. Like these, if we can get like 2-3 strong days in a row on these, if you're showing me BBAI at $7 on Thursday, I feel like you kind of have to short it. But we still need to see where NVIDIA's earnings end up landing tomorrow. So I think that's all I got. I thought I had one other point, but now I can't remember what it is. So I'm happy to answer any questions that any folks may have. I think the first one I'm seeing here is from Cody. I was looking at TTD off the open with the price correction into its ADMA on the 5. Okay. I was hesitant to pull the trigger, even though that's a setup we like. Reason being is that at 9:35, the Q's already put in a candle, a pivot candle, and while TTD was still making lows. Even though TTD put in a couple dojis, I didn't want to take the trade because it seemed like it would break that low if the market pulled in. Basically, in a vacuum, that setup is something I'd take right away, but in comparison with the Qs, I didn't have full conviction. Not sure if my reasoning is correct. I think your reasoning is 100% correct. There were a couple things off the open that were really weak today. This TTD chart in the beginning of the day actually reminds me of the Palantir chart in the beginning of the day. Palantir sold very hard, was very relatively weak all day, put in this pivot low into the 21 EMA. I might have even called a long out there, but it was the same deal. It was like so relatively weak. I remember into the bounce, this first bounce on Palantir, and TTD is kind of the same deal. I still thought at that time that the market was going to give us a second pivot high and work its way lower. I really did not think we were going to get this degree of market continuation today. So in my head, there was a couple names where I was like, oh my gosh, like what's going to happen in some of these stocks if the market actually moves lower? And Palantir was one of those. So weak off the open, bouncing back a little bit, giving this doji at 955 as a lower high when the SPYs are kind of back to an equal high, and it kind of looked like it was going to be a screaming short to me. So I think that thought process is exactly correct on not buying TTD for the same reason. And that's why we don't look at things in a vacuum. We always are looking at things versus the market, The other thing I don't love about the trade, even in a vacuum, is there wasn't news. I really like that ADMA catch up through price trade, specifically in news. I don't hate it when there's not news, but I really, really like it when there's news. But no, we don't look at things in a vacuum. So I think that your thought process was 100% correct. The stock was weaker than the market. The market pivoted on the second bar. This thing made a new low on the third bar. This thing price corrected all the way to the ADMA. The market didn't even get close to price correcting to the ADMA. And Palantir was a similar thing. And look what this thing ended up doing later in the day. Terrible. And you got a glimmer of that weakness in the first 15 minutes. And it was so much weaker than everything else. And then TTD ended up being held up, I guess, more by the market and grinding higher. But I 100% think it was the right process. I was also really curious to see in this bull pennant pattern that I called out with Tesla, it actually seemed like it was weakening a little bit. And I really wanted to see also, wow, what if the market pulls back, is it possible that Tesla gives another failed breakout of 350? If you remember, a handful of trading sessions ago, Tesla had 2 failed breakouts at 350 all within the same day. And I think that some of that was also caused by the market. They tried to squeeze it up, but the market got weaker, and it caused the stock to fail. And I was like, wow, is it possible we see another failed breakout of Tesla through 350, especially with the bad news that was out this morning? But no, that one certainly continued to squeeze, just like a lot of those other names did today. So yeah, that's my thoughts on it. I think you did the right thing. Thoughts on the China weakness? Well, the China weakness I think stems from PDD. PDD got slaughtered. Their earnings report was terrible. They were down 14%. I mean, that report was objectively terrible. I don't like PDD as a company. I don't like to trade PDD. It's actually not a pure play on China in the same way that some of those others are because of Temu. And Temu, we know right now, just has a lot of scrutiny in the United States. And they're losing or lost that de minimis tariff exemption. So Temu's business is probably taking a hit already. I'm surprised it showed up already even in this quarter. I didn't take a super hard look at the report outside of seeing the numbers were terrible. But I think that that's what kind of caused some degree of weakness from these other Chinese stocks. So Alibaba is not in play today. JD was weak today as well. It seems like it was stemming a bit from the PDD earnings. And, sometimes these names trade in a little bit of a vacuum. But I would also repeat what I said in the morning meeting today, which we saw that headline in Alibaba. I think we should keep an eye out. I just think it's really important to keep an eye out for this going forward because it's telling not just for Chinese equities, but I think it's also telling for American equities. What news am I talking about? SAP announced in the morning meeting, I'm not sure if anybody has that news in hand that they can copy and paste into the VTF so that I don't misquote it. But for cloud or AI services or something, SAP, which is a European company, is deciding to use Alibaba as their provider instead of traditionally, I think almost any company in the world, unless it's a Chinese-based company, is going to end up using an American company for cloud-related things, for AI-related things. They're going to use Microsoft, Google, Amazon, those names. And then we saw SAP make this announcement today that they are not going to be using Amazon or whoever in this announcement this morning for their cloud, I think it was cloud, not AI services, and they're going to use Alibaba. And that's just very interesting. Are a lot of these European or South American or Middle Eastern countries who previously, before this tariff hecticness, would have used American companies for those services, are they going to start using Chinese companies? And that could be telling both for the future success of those Chinese companies as well as potential weakness maybe for some of the U.S. companies. So I thought that was notable, but it's just one company on one headline so far, but something we need to keep an eye out for sure. So my thought on the Chinese stocks for now. Iron Condor guy is back, but small. Thank you, Show. I've given it to SAP And Alibaba Group announced a major strategic partnership to accelerate cloud transformation and enterprise innovation, with a particular focus on integrating SAP's enterprise software with Alibaba's cloud infrastructure and AI capabilities. There it is. Thank you. From David, regarding SMCI, would the 9:55 a.m. candle on the 5-minute be considered a momentum type trade based on the break of the first 5-minute candle and the ADMA catching up? Technically, yes. I don't like that trade. It's not a trade that I really ever take, but technically, yes. And for the real momentum traders that are out there, that is something you can take. I more prefer the trade that Cody was referencing earlier, which this SMCI didn't really, this was more like the market. It did not price correct to the ADMA. It was a very shallow price correction at the beginning of the day, so the setup would have required you, in my opinion, to pay up too much. But I more prefer that, pull back into the ADMA, create a pivot, go long off the pivot in anticipation that those highs are eventually going to break and then you're going to get continuation. Then I prefer, the momentum buy setup. So I don't love that trade. It is absolutely a valid trade that you can take, though. And the problem is, the risk-reward to me on that, because I don't really consider this to be, an ignition candle. So you kind of have to use a previous pivot low as a stop loss. So to get the previous pivot low you have to use is the low of the day. And then at that point, it just becomes a lot of risk, I feel like, for a buy high to sell higher type of momentum trade, where I'm nervous I'm not going to be able to get that reward to at least get a move to one-to-one very easily. So it's absolutely a valid trade. I would like it even more if there were stock-specific news, because stocks trade better with momentum on news than if they're just kind of trading on their own in their own universe with the market. And there was no new SMCI news that I'm aware of. Though, again, to repeat myself, it is a valid trade, not one that I love. Prefer that more kind of Cody type of setup that he was talking about. Or if you are going to take that valid momentum trade that you're describing, you are doing it sorry, I got distracted by a junk text message. You're doing it in a news name. So I hope that helps, David. Appreciate the question. Over to the YouTube. Don't you think today shows market has inherent strength in itself? I saw some charts last week that hedge funds weren't positioned in this rally. That's 100% correct. Maybe they chase here. They already have been chasing here. It looks like I saw some research data this morning that on the little sell-offs that we had over the course of the last week, like for example, Monday a week ago. Anybody remember Monday a week ago when we gapped down on the Moody's downgrade, and then it was the craziest buy up off that gap down that I've almost ever seen? Like that, and the other similar gap downs that got bought up last week, looks like it's under positioned funds using those mini dips as an opportunity to be able to get stock. And like I was saying before, I'm not necessarily convinced that today was real buying so much as it was people getting screwed from the news that came out on Friday, which then reversed itself this week from a positioning perspective. What you're saying about funds being underpositioned is still very, very true. I noted that this morning in the morning meeting. I saw this chart was in Pat's note. I also saw a different chart, which I don't think was in Pat's note, but it got the same idea across of look how light the positioning was at lows in April. That's this line. I think this updates on a weekly basis. So this light positioning has gotten less light. It still has the potential to get even more less light. Those funds can still buy more. But the thing that I would want to know is this isn't necessarily a counter trend buy signal either. While those funds could continue to chase price in this area and reposition themselves and force the market up, you also can note like what happened in 2022. this type of chart can stay in light positioning for weeks or months at a time. So it's not necessarily in and of itself a counter signal. So the question is, at these current market prices, when we know that the systematic bid is actually being reduced, today's move higher, unlike the moves higher over the course of the last few weeks, does not seem like it was brought about by the systematic bid that has gotten us this far. It seemed like it was once again mispositioned funds buying stock, especially when you consider what led today. What led today was Mag 7, which is probably where underpositioned funds are going to be buying, but it was also led by the short basket of stocks, which is just people getting short squeezed. So that seems to be where the real buying was today, and it seems like it was on an institutional fund basis and not from systematics. But I'm not necessarily convinced that that buying can or will be sustained that we've seen. I'm actually more of the opinion here that we are not necessarily going to break down either. I think we need to see some bad economic numbers. We need a real catalyst to bring us lower. And I can't promise that that's going to happen at all. And if I could promise that's going to happen, I couldn't promise the exact timing on it. But so I don't necessarily think that the market's going to break down, but I think that there's a ceiling in this area, that 595 resistance, maybe as high as 600 or even low 600s. I think that there is some degree of a ceiling here, especially this week with the pension fund sell reval. And then we'll see, if we just kind of continue to stay range bound, which is more my initial thought process until and unless I feel like we're range bound with some degree of downside risk, but the downside risk needs a catalyst. And that catalyst has potential of being economic numbers. But I'm not convinced that we're necessarily going to see still those impacts fully yet. We might see an inkling of it. That's kind of where my thought process is. Though the one thing that could really, really derail my thought process on a ceiling here is NVIDIA earnings tomorrow. If NVIDIA blows out their report and blows out guidance, then all bets are off, and this market can absolutely continue. But we'll see what happens. And you're mentioning that AVGO looks good. A lot of things look really good, to be honest. A lot of charts technically look really, really good. The SPYs look really, really good technically. The Qs look really, really good technically. The AVGO that you just brought up looks really, really good technically. A lot of things look really good technically. I just don't know if the market dynamics are as supportive as they had been. If we get a pullback from Tate and the VTF, 3 to 5% into 56, 5,700, is it viable? Yeah, I mean, I'm really looking at SPY 5,700. You could overshoot that a little bit. So, yeah, I do think that 5,700 is very viable. It's been a very much a line on the sand for me, where I think below it, if we're holding below it, it changes the technical picture here of the market. But it's not impossible just to get like a quick overshoot where you're not holding below it. Quick overshoot below 5,700 that comes right back. I think a lot of that, again, depends on what I was just saying. I think we stay range bound in this area. I don't even think we test 5,700 unless we begin to see some catalysts impact the market. And NVIDIA could also be a downside catalyst. I don't think it's going to be one, but it could be an upside catalyst. It could be a downside catalyst. It could end up being a nothing burger. I think that the real downside comes back into this market only when and if we see a deterioration of the economic numbers. And that could be in June, July, it could be August. Very hard to time that specifically. What do you make of the weakness from HIMS with the overall market strength? Yeah, so notably there were a couple high-flying stocks, like literally a couple that I noticed, HIMS and Palantir, that dramatically underperformed today. And HIMS I have not been looking at closely, so I don't have a strong opinion on that one. Palantir I have been watching closely. I have a little bit of a stronger opinion on it. I kind of think that when they are starting to short squeeze all these other stocks, like this was a theme that we had seen in the past. Um, when they're squeezing the hell out of 2, 3 to 5 stocks, AMC, GameStop, Bed Bath and Beyond, BlackBerry, those names can just keep going and going and going and going and going because they're just squeezing those 2 or 3 stocks, and it can be crazy. And we've seen various iterations of this cycle in the past. Then it seems like people start to get greedy, and they say, like the Wall Street Bets community, which is really what I'm initially referring to here, eventually they got greedy, and then it was every stock. We're squeezing every stock, and everyone is trying to pump their name and say, GameStop is done. This is the next GameStop, right? And then what ends up happening when they do that is they spread that money out in too many places, and then it like collapses on the weight of itself. Where then you lose GameStop, you lose AMC, you lose those leaders, but the other ones can't go either because people are just starting to spread their money out all over the place because everyone's trying to squeeze everything at the same time, and therefore they squeeze nothing. So I'm almost wondering when I'm looking at Palantir's weakness today, and the same might apply for HIMS, which has been a recent high flyer. The other recent high flyers like Hood were able to continue today. I almost wonder if the reason why a couple of those names were weak was because they were beginning to buy up everything else today, which can last for today, tomorrow, a week, maybe even a month. But consistently when we see a beginning of like the spreading out of the squeezing of junk stocks, usually has meant that we are closer to the end of a buy cycle. I can't use that to time the exact day necessarily, but that's what it has shown really consistently for like the last 3 or 4 years now. It's crazy to me that real short squeeze period was all the way back in the beginning of 2021 now, and now we're halfway through 2025. Time flies. It feels like that was yesterday when I was talking about those stocks making absolutely no sense at those prices. And of course, I was 100% correct. But if you shorted them a month too early, you could have blown up your entire account before it actually worked. So that's kind of my just generic thought on it, but we'll see. All right. Looks like I got through all the questions, so I'll wrap it up there with the usual. Have a great night, everybody. Make sure you're still catching up on your sleep from a long weekend that I hope everybody enjoyed, and I will see you all tomorrow morning.